Good morning, everyone. Let's kick it off here. All right. Last night's session, Friday session on U.S. markets was a really strong finish to the week, and actually marked the best week in almost a year in U.S. equity markets. It's pretty impressive considering how scary things were as recently as 2 weeks ago on the same markets. I think that we're seeing an interesting sort of divergence at the moment in what's happening between U.S. markets and some of the global markets. Some of the global markets have seen a minute rally, to say the least, in at the same time that the U.S. market has recovered about 75% of its losses, possibly even more of its losses from the top. So the same sort of markets, some of the European markets, our local market, and many other markets haven't even recovered, a third of the losses that they saw from the top. So I think that there is something going on, a major divergence that is going on. Our market seems to have totally decoupled, for the time being, from what's going on, in the rest of the world. Um, we had Amazon had shocking numbers on Thursday after the bell in the States, which weighed a little bit on things in the Nasdaq there on Friday. But other than that, I mean, earnings have come out very, very solid. We've seen certain little stock-specific instances where guys have been missing, but as a whole, as a group, markets have looked very, very or earnings, sorry, have looked very, very bullish. So I think there's something to take note of going forward in the States. If you see this morning, we had some follow through from the States in the Nikkei and in the Australia market, but China and Hang Seng a little bit soft, maybe a little bit soft because of that the interlinking that has been delayed between the trading on those two markets. I think our market's a little bit disappointed in that. Like we said, out of China, things out of China have just been have just started to turn down again, started to look ugly again. We see one of the biggest property developers there, Vanke, which also looking like it's under pressure. Margins starting to come under pressure there, and I don't see any near-term relief out of those that sector in China. All right. If we look at chart of interest today, we've got the European debt yield percentages as a percentage of GDP. It not only shows the government debt, also shows household debt, and it shows non-financial corporations debt. There's obviously some scary, scary statistics there. It shows you obviously how dangerous it is if some of these countries do go into recession again. And I think that is what the panic was about the other day, or the other day, a couple weeks ago. I think this is a big part of what the panic was about. This is kind of the third time really revisiting a debt crisis or some sort of panic out of Europe, and I'm not so sure that we won't be revisiting this quite soon. I know that the German number on, was it Friday or Thursday? Sorry, quelled concerns quite a bit out of the European growth issues. But Germany's a separate issue from the rest, and I think that if these others start to slip back into recession, things can get dangerous, and it can really create some serious turmoil in global financial markets again. All right. Um, this morning we had. That's supposed to be first round, right? FBR. Stiffy. First round have numbers this morning. First round. Who's FBR? Famous brand. Yeah. Okay, sorry. Yeah, sorry about that, guys. We have Famous Brands out this morning with headline earnings per share up 18% to 2 rand 12. Expectations for 237. Revenue up 14% at 157 versus 1.63 expected. That looks maybe a little bit soft. That's actually our full year numbers taken in half, so that's you can't really compare that like for like. If you look at divi per share, we came in dead in line. Full year headline earnings per share expected up 16.5% at 473, and revenue expected at 3.26 billion. Nedbank had its third quarter sales release. We had a credit loss ratio of 0.77 versus 115 expected. I think that's obviously significantly better. Um, they're saying that they're well positioned for organic diluted headline earnings per share growth above nominal GDP. So it sounds relatively positive out of Nedbank. Um, we have later in the States today, we've got Merck and we've got Amgen. So not a whole lot going on there today in terms of earnings to drive the market. All right, if we look at market data, we have Japanese PPI, which is out this morning, came dead in line. We've got the German IFO numbers at 11 o'clock. Keep an eye on that. Those have been moving markets. Like we said, all the German stuff has been a really good indicator as of late. We've also got PMI numbers in the States, pending home sales, and Dallas Fed manufacturing. Okay, let's get into the maps. Okay, the first thing that we're going to look at here is actually the ALSI, and I wanted to look at this and shorten it up just a touch. Obviously, in the that downtrend here, and to me, this is really starting to shape up potentially like a bear flag, and getting a little bit worrying that this is looking like we're close to dropping out. I would almost say that if we get below 43,000, that that we've kind of dropped that level. It just the pattern doesn't look good. We came out of this downtrend. We have pushed up, and we pushed up reasonably hard off the bottom. We got 2,500 points at one point. Like I said, this bounce is nothing in relation to the S&P. You look at the S&P, for instance. Look at that downdraft, and look how much higher we are in terms of the bounce and the percentage that we've regained from the tops. If you look at the same sort of thing here, it's not even, we didn't even get close to halfway. And I think that's a little bit nerve-wracking. I think that if we can't bounce when the States is bouncing like that, what's going to happen if it starts to fall? So just keep that in mind. Be careful out there with all these things. Yeah, let's look at MTN. We look at MTN a little bit. So obviously one of the bigger blue chips, kind of holding our market down a little bit in the last few days. 235, obviously a monster level. We did get that one close below 235 here at the beginning of the month, but we quickly regained it. Obviously, this is an even lower close than that close, and to me, this is starting to look a little bit heavy. If we drop here, if we drop here, if we can hold below here today, then I actually think that we've got a quick maybe 11 bucks a downside here, probably taking us in right around the 200-day moving average, which is a touch below 225. So watch that one over the next couple sessions. Woolworths, kind of the opposite of that in terms of looking like it made a couple double bottoms here, and looking quite symmetrical as well in the way that it came down here. Very much a little W pattern here, and if we get above 72 and it can hold above 72, then I actually think that we can probably make the move, the height of this channel quite quickly. Call it $4 to the upside on the table maybe in Woolworths. All right, Sunlam, or sorry, Coronation, another one. I know that they had a trading statement on Friday. I was not in house when that happened, unfortunately. Um, but I think I know that the numbers came in. They look relatively solid because they're guiding for to 40% to whatever it is. I actually think that it may have been shade below expectations. I think that the consensus was for them to come in with over $6 of earnings, and that looks like the absolute top end of projection. So I think that maybe it's a little bit weaker than expected. This also has been consolidating. Looks like it's also making a little bit of a bear flag right underneath the 200-day. So I don't think that the chart is exactly looking great. If we drop out of this pattern here today, which I would say if it just trades slightly lower, we'd be dropping the pattern, and I think that we can really potentially take us down to lower targets, maybe getting into that support level around 85. All right, and then the last one I wanted to show is Grindrod here, and I was just having a look at this, and I mean, to me this is pretty ominous. We were trading north of 28 bucks only back in June, and this is a great global bellwether, obviously for obvious reasons, And very much like Caterpillar. I know Caterpillar came out with good earnings the other day, but Caterpillar's also been getting hammered off the top. And I think that the fact this thing moved from north of 28 down to close to $20 the other day and just gotten this tiny little bounce here is a real negative for global growth going forward. Obviously, it's one of those stocks that can really kind of point you in the right direction, and I think we need to take cognizance of this. This thing doesn't really start to gather some momentum soon, then I think it's obviously, without question, it's hugely negative, and it may be a reason for us to proceed with a little bit more caution. But a good leading indicator for us. We should have been following this one. In terms of what the Aussie did, this one gave us a great little heads up when this really started to peel off the top a long time before the Aussie did. And that's it for today, guys. Thanks a lot.